Physicswallah has filed its DRHP, eyeing a 3,820 crore rupee IPO. The edtech unicorn, founded by Alak Pandey, is betting on its hybrid model and 2 million strong student base to make a splash on Dalal Street. Rachna Dhanrajani had first reported this on December 30th, and she joins us now with all of those details. Rachna?
India's edtech story is entering a new chapter, with Physicswallah filing papers for 3,820 crore rupee IPO. This makes it the first Indian edtech unicorn to go public, and unlike most venture-backed startups, it will debut with over 80% promoter holding intact. We had first reported about the edtech company's IPO plans back in December, and now confirming it, we have the updated DRHP that the company filed over the weekend. Now, the offer size breaks down into a 3,100 crore rupee fresh issue and a 720 crore rupee offer for sale. Both the founders, Alak Pandey and Pratik Boop, are set to dilute a small portion of their holdings, about 360 crore each. While the bulk of the proceeds will go directly into the company's expansion strategy that is increasingly offline first. Physicswallah began in 2016, as we know it, with a YouTube channel and a teacher-led digital model. But today, its offline network has surged from just 28 centers in FY23 to nearly 200 in FY25. Revenues reflect this pivot. Offline income jumped more than 4 times in 2 years to 1,350 crore rupees, nearly on par with 1,404 that was earned via online. Now, the company plans to deploy the IPO funds in line with this hybrid model. Nearly 460 crore rupees have been earmarked for new centers and about 548 crore for lease costs, about 470 crore rupees for investments and acquisitions in subsidiaries such as Xylem Learning and Utkarsh Classes. Now, all of this comes at a time when India's edtech story was a bit shaken. So there is clearly a financial turnaround story that we also saw with Physicswallah. Revenue was at about 2,886 crore rupees, while the losses narrowed to 240 crore rupees compared to a massive 1,127 crore rupees in the previous year. The company has also moved into positive net worth and cut debt, which is crucial marker in the edtech sector, where many peers are still struggling, as we just spoke about them. Now, for years, Physicswallah had celebrated being the only profitable edtech, but profitability slipped last year. Some of this was due to accounting changes, but operational costs, especially from offline expansion, that have also weighed in on the margins. The attrition rate has also been high for over 2 years. Now, competition from entrenched offline giants like Akash and Alan did not come in pretty well for Physicswallah, especially in the test prep and training segment where they are. Will this now all of this will lead to pressure on growth, or how will they come out and as they debut on the D Street are some things that we will be closely watching for, as it's not just for the company but also for the startup ecosystem together.
Well, thank you, Rachna, for those details on Physicswallah's IPO, also on what's